What's going on, guys? So basically, just today I wanted to show that there is a big divergence in the market right now between the Qs, the Nasdaq, and basically any other risk metric right now in the market. It's extremely weird. Yeah, I just also wanted to look at the internals and kind of give my thoughts on where we are right now. So I just wanted to start, by showing that the market is not confirming basically the movement of the Nasdaq, of the Qs. Right now, it's just basically being pushed by people that are buying the AI narrative, I guess. With the big names, the only thing that is moving right now, guys, is the FANGs and the semis. It's basically XLK and SMH, the big broad sector ETF for those sectors. I mean, yeah, and it's pretty odd, honestly. To be quite honest, it's very weird because if this was the beginning of a new bull run, basically, right now you would see all the other risk charts go up as well. Example, right? I got TLT here. I got IWM, the Russell. I got HYG, right? The credit, high credit, the ATF, right? And none of it is following the Nasdaq right now. So that's weird. You know what I'm saying? When you see things like that, and you can see as well, like usually when, the market was actually bullish, right? The overall market was bullish. Everything went up in the same time during all the, the nice bear market rallies we had in the past right here, right? Everything kind of moved all together. And right now is the first time where it is not moving together whatsoever. So this is really weird. We got like a lot of divergence, between here and here, So that's a pretty big divergence. Someone is wrong here. Okay, so the Qs are wrong and it's going to rubber band snap back down, or the rest of the market will soon follow because we are in a new bull market. But right now the market is not. It's actually saying that we are not in a new bull market, and that the Qs is just going crazy. It's nice, bear market rally. That's kind of what it's saying to me personally. So now I just want to show you guys right here what's going on in the internal and why I'm saying that it's not a new bull market. And as you can see right here, right, this is smart money and dumb money that I really like using just to to see what's going on in the internals. And as you can see, smart money, they bought here, right, at this low, which I did call in one of my previous video. I said we were going to bounce and this was a buying opportunity, which it was, and smart money was buying. I did buy also some position, but then right here smart money sold and they're not buying right now. Smart money is not buying right now. The only one that is actually buying right now is dumb money, which is the red line, and you can see the red line is actually going up because they're actually buying. So dumb money right now is buying the breakout right now on the Qs and on SPY. It's not smart money that's buying this breakout. So that's kind of important to look at. And then, the other thing I love looking just to see the extremes, right, is the RSI percent, not the RSI itself. It's the RSI percent that I like to look at. And as you can see right here, this is an extreme, guys. So we are at an extreme to the upside. This is why I do believe that the Qs is wrong and it will rubber band snap back, because it's someone's wrong, right? Like it's the Qs is wrong, or it's the broad market that's completely wrong. But when I'm looking at the internals right now, and I'm just in my head asking myself, what are the probabilities, right, of the Qs being right or wrong? And as you can see right now, this is not sustainable. This is the stuff you see right before we start having a nice leg down. This is why I like using this. It happened here again. But that's the thing, you need to be cautious, because we can stay at extremes for longer than, just 1 week. We could have another week of extremes, and then we will start, going back down. As you can see, it called the top here, called the top here, even here, it called the top right here after the October low. And right now we're again at an extreme. So this is why if you're long you're buying right now, you're kind of stupid in my humble opinion. This was not this. The time to buy was here when I said to buy here as well. A breakout, a nice flag pattern. But right now, you can clearly see that based on the probabilities, we should go back down. And as well, I like to combine this with the breadth, the 10-day breadth, which is very powerful, which I just added as the red line. And you can see we are now, at an extreme. So we will, have a leg down. Is it going to be, a big one, or, just we're just going to go sideways and create a accumulation pattern to go back up? That is possible. But for now, this is not an entry for the longs, and I'm seeing a lot of bulls right now. They're all like, calling for a new bull market, and you should buy, and I'm just looking at this, and I don't know, man. This doesn't make a lot of sense to me, and the reason why, guys, is because, right, you don't need to be a genius to understand that right now what's going on, right? Let's go to a stock chart, right? I love this tool, by the way, on stock chart. What's going on right now is the only thing that's pushing the market is tech, right? So this is really nice to use. Everything else, guys, is lagging. It's all red. Like, there is nothing going up except the FANGs and the semis, guys. And I know because I bought some long positions, and at the right timing, I bought a VNQ, a real estate ATF, from Vanguard, right? I bought these nice positions, right, where those are long-term positions, and I bought some bonds. I at good levels, and I'm up a couple of percent, right? I'm barely up, guys, and some of my positions are down. I have ABNB, right? And that's not the characteristic of a bull run. Like, what I'm saying? During a bull run, everything goes up, right? I have some Tesla. I bought the bottom. I'm up like 8%, but this is not what you typically see during a bull market. This is really odd, and you can really see that it's tech, but it's not even all tech. It's just, again, the FANGs and the semis. It's not all tech. And even when you look at consumer discretionary, right, which if we are in a new bull market, why is it lagging? You know what I'm saying? It doesn't make a lot of sense, guys. So that's why I personally think that the Qs are wrong when I'm looking at the internals, and I'm kind of trying to, figure out, who's right? Because at the end of the day, I'm not trying to have a personal opinion. I'm just trying to understand what the hell is going on. And I'm looking at this, and it doesn't make a lot of sense. If the Qs were right, why is high credit not, pushing higher as well, right? So, and everything else is lagging. It's all red. So right now you really just have not even all tech, a small portion of tech, but because of their weighting in those indexes, it's pushing the market up. But when you actually look under the hood, it's not as healthy as a lot of bulls are trying to make it sound. You know what I'm saying? Like, I've been, and I'm open-minded. You know what I'm saying? Like, I caught some of those rallies. I call the rallies, right? When I'm bullish when I need to be bullish. But right now I'm being very cautious. This is especially not a place where you want to start buying, in my humble opinion, especially with these extremes in the internal, and just understanding under the hood what is moving the market. It's kind of odd. It's simple. It's not hard to understand, but it's not, it's not something where, it's kind of weird, So this is why personally I'm more going forward. This is a bear market rally, not the beginning of a bull run, because of what I just said, if that makes sense. I apologize. I don't have a script. I'm just speaking, over my head right now. And now one last thing I want to go look at is the positioning of the bigger players, guys. So this is really important. So I want to look at the Qs. Basically, I want to look at the commitment of trader report, which is really important to look at. And you're going to see in a moment why I'm also bearish right now. I'm not bullish anymore. I was bullish, but I am no longer bullish. And it's kind of weird. I'm going to show you. There's another divergence as well with the big players, and it's a really weird divergence. It's very weird right now what's going on. But if you focus right here, focus on the red line. Okay, those are the commercial hedgers. Then the green line are the non-commercial hedgers. They're still big players, but they're not commercials. They're non-commercial, but they do play with big size. And then the blue one, it's us, the stupid retail. But basically, you can see they cut the bottom, man. They've been spot on. They cut the top here. They were net short. They were net long a little bit here. Then they were net long at the bottoms here. They were net short, excuse me, here. And we did go lower a little bit. And then in October, they flipped long. They were net long. They're really good, man. Their timing is really good on the cues. And they were net long for all this time since all this bear market rally. But now, and no one's talking about this, and I don't know why. Everyone's talking about the trader report and stuff like that, but they just flip negative. Like when everyone's turning bullish, they're out. And as you can see beneath, it's the commitment of financial traders, and the dealers, the red line again, they're now short. So now everyone is talking about a new bull run, but the big players that actually cut the tops and the bottom, they're out now. So this is kind of odd. That's why I'm not calling for a new bull run. And it's not because I have a bearish bias. I'm not seeing it, guys. And I'm also looking at my own positions, and nothing is moving. Nothing is up. The only thing up is FANGs and the semis, which I have some semis. I have some FANGs. I have Amazon. I bought Amazon at the bottom. I think I'm up like 90-80% on Nvidia. It's crazy. It's just these crazy numbers, but it's just on these only position. Oh, and Shopify, which I sold after the big pop, after they fired 20% of their workforce, basically, which is sad, but it's how the market works. So this is really odd. And yeah, nothing else is moving, guys. This is not the characteristic of an actual real bull run, like whatsoever. And then I'm going to show you the last divergence, guys, which is really weird. It's basically there's a big divergence with the positioning of these players, of the commercial hedgers and the dealers when it comes to just the S&P 500 and the NASDAQ. And like I just showed you, that now they're net short on the NASDAQ, but they're still net long on the SPY, which is weird. Like it is odd. This is making me question what I said, though. This is kind of just a very weird thing. They've been net long for a while, and because of that, I do believe that they will turn net short again. I just don't know when, but I would highly suggest to keep an eye on this and to track this, guys, because I do expect that when they do turn net short, their timing is pretty good, guys. So this is why I don't short the market. I wouldn't. I don't know who wants to short the market, but I'm not buying right now. I'm just waiting for a potential pullback. But I'm not buying in the hopes of entering a new bull run for the next 2 years. Like I'm not. And the market right now, as I said here, this is really telling that if this was a bull market, right? This is what a bull market looks like, right? And this was a bear market rally, right here. Now, this is not even confirming a bull market trend. This is odd. Maybe we should go back and look at, you see here, this is COVID. Everything went back up together, And so that's what I'm talking about. Like right here as well, 2018, when that was a pretty big capitulation, right? Everything went back up together. Now what is this, 2016? Let's go in 2008 to look at. You see right here, again, you see 2008, everything went up together as well, right? So that's the characteristic of a bull run. Like this is the fact that the broad market, and not just the stock market, but the bond market and the high credit bond market is not following is is suspicious to me. So that's pretty much it, guys. I just wanted to make a brief video about that. It's been a while. I was supposed to make a video, but I forgot. I'm studying and stuff. So yeah, that's pretty much it. All right, have a good one, and stay blessed, guys. All right.